Welcome back. Let's unpack the markets now for you. Out in Asia, of course, this morning, investors extending their recent rally, tracking another Wall Street record as they cheered what was a fresh trade deal between the United States and Mexico. This one ending what has been a row picked up by Donald Trump that had rattled global markets. The agreement, however, does raise hopes that the North American Free Trade Agreement, or NAFTA, rejected by the White House soon after Trump's election, can still perhaps be salvaged after Canada rejoins talks on Tuesday. But whether it will happen or not is another question. Might be a while before China and the US also begin to reach a deal, however. Tokyo's Nikkei index inching up in trade to close at 22,813 points. The Hang Seng moved up 0.3%, 28,351. The only faller was that Shanghai Composite Index, dipping 0.1% to 2,777. It was a broad-based rally which pushed U.S. stocks higher last night, with the S&P 500 and the Nasdaq closing at record highs for the second consecutive session, as investor sentiment was buoyed by a trade agreement reached between the United States and Mexico. The Dow Jones Industrial rose over 1% to 26,049. The S&P 500 gaining 0.75%, ending at 2896. While the Nasdaq Composite was almost 1% better at 8,017. Taking a look at the market performance, it was green all of last week, it was green yesterday, and more green even today, 0.5% to the good for the JSE All Share, while the Rand seems to be sitting at 14 Rand 16. Will it get below that mark of 14 Rand is going to be a clear lookout for the market as well. Let's unpack how the rest of the market is looking. Well, here's one man who's certainly smarter than me. Let's unpack the markets with him. Bright Khumalo, portfolio manager at Vestact. Bright, thank you so much for the time. But 0.5% to the good for the JSE All Share, creeping up to that 60,000 mark. We headed towards record territory ourselves, aren't we?
Yes, slowly but surely, even though the economy doesn't feel like it. And obviously it's on the back of the likes of Tencent just quickly recovering, which is, filtering into our markets basically through Naspers, which still accounts for a big chunk of our local markets. And we've seen some of those rand hedges, the likes of Richmond, also have been stronger in the past 2 weeks, notwithstanding that the rand also is getting stronger. So lots of economics and lots of, things going on for the underlying companies there. And if you look at the, on the companies front, since I've been gone out of work, I've seen very strong numbers from the likes of Supergroup and Advitech, basically looking very strong there, especially their tertiary division, increasing profits by 24%. And even though the company, the division is only 39% of the company, it contributed more than half, basically, of their profits. And, it's very interesting to see this company do well in a market which is very tough for operators. If you've looked at, Caro's results, for example, as a comparison. And, we like this company at Vestact.
So sustainability, though, of that stock of Advitech, do you think that there is some notion of sustainability with regards to its growth in this sector?
Look, sustainability is going to be tough going forward because on their high-end schools, they are complaining about kids still leaving the school because of affordability reasons. So, they used to be able to pay for these high fees, but not anymore. Or actually, the one which was more prominent, which is, the parents and the kids leaving the country, basically to go stay in a different country like Australia or somewhere in Europe because of, the political environment that they're not liking here in South Africa. But in terms of, their mid-fee schools like Maravest, for example, those are doing exceptionally well. They're getting to operate at capacity. So you're seeing some of those students that are coming from the top schools coming down to the sort of mid-tier schools in terms of affordability. And that's helping to improve margins on those schools. The same thing basically has been happening on the tertiary front, but they're actually increasing capacity there, which is improving their margins strongly. You know, in the interim, I think the company will be stable, and at the current multiples that it's offering, it's actually a bargain here, we think, at Vestact, and we actually are aggressively buying the company.
Let's talk about those Rand hedge stocks, though, as well. 14 Rand 16 against the US dollar. That's not bound to do them any favors in current trade, but we certainly won't be complaining at 14 Rand 16. The hope is that it'll go below that mark, won't we?
Yes, of course. I mean, we had this conversation about 2 weeks ago. It was very different. You know, Turkey was going the wrong direction, and it was taking all the emerging markets with it. And South Africa, again, being the best performer in those emerging currencies, you know, sort of stabilizing and coming back to 14.12, 14.16, as you're saying. It'll be, you know, it'll be very good to see it below 14, like you're saying. But only time will tell at this point. But what it means, though, for the South African economy, especially on the rate side of things, is that there won't be an emergency rates hike. The last time we saw one was in the year 1998. At the time, I was actually doing, I think, my second grade or my first grade. So you can see how long that's been, and hopefully none of that happens.
Yeah. Look, that Rand figure, however, and some will perhaps ask the question as to what exactly is moving it now? What exactly is it that is adding to it? But we're seeing that Chinese stimulus come into play, and perhaps that is one thing that we can talk about and add exactly. How exactly is that influencing things, and what has been decided out of China?
Oh my gosh, you know, China's reply to basically Trump's tariffs was to, you know, devalue the yuan, which is what you're referring to, a lot of stimulus coming out that side. And net, basically where you end up is where the tariffs basically don't really mean much to China, as they can still export as much as they, you know, they could previously. Yeah. And that's their goal, basically. They're playing this game theory game, the game of chicken. They're not blinking. They're going straight at Trump, and, you know, they wait for Trump to do, you know, to perform his next move. But they're not letting go easy, basically. So they retaliating with, you know, with force.
Not blinking at all. What else are you keeping abreast of, particularly for the remainder of the week? More earnings news perhaps coming out? It does seem to be quietening down a little bit more.
Of course, we looked at basically the US-Mexico deal, which was supposed to include Canada and NAFTA, but Trump came out and said, "Look, it has negative connotation. This NAFTA thing. We're going to call it the the US-Mexico deal." And you know, if Canada doesn't want to, you know, participate fairly, this were his words. They're going to basically introduce automobile, so those are car tariffs, which is not good, which is going to force them to actually retaliate quickly in terms of signing the deal. And, you know, this is putting a lot of pressure, obviously, on the president of Canada. But looking at the deal itself, the conclusion here is that it's still exactly the same NAFTA deal, but the only difference here is that there's some changes with regards to technology companies, you know, labor, unions, and a few other things. But it's still the exact same deal where U.S. companies can still operate in Mexico and in Canada, well, pending, of course, Justin's signature, and vice versa, that you know, there isn't any tariffs in doing businesses in those three countries. Yeah.
Well, I told you he was much smarter than I am, and that's why we chat to him. Khumalo, portfolio manager at Vestact, as we unpack the markets there.